But the truth of the matter is the market is nuts, right? So I want you guys to realize, really how it's working right now. The way the market, I talk a lot about the market. I'm talking a lot about the market lately. But the truth of the matter is the market is nuts, right? So I want you guys to realize, really how it's working right now. Because I talked to a lot of people because the Storage Nerds doors were open, and I talked to a lot of people about their like aspirations of like buying storage over the last month, right? And I get a lot of the same people having the same kind of thought process. And I just want to clear this up. Everybody has the buy box, but essentially, like everybody has a buy box. Okay. And the issue is that right now the market is like is nuts. We all know this. The real estate market is nuts, and interest rates are super high, right? So we've got interest rates. And then we've also got your down payment. This is if you're going to go and get a bank loan, right? Okay. Interest rates are really high, and if you need to, and down payments are really high as well too. So banks are being basically, from this right here, it just shows you that banks are being very, very conservative. Okay. The down payment is really high. Down payment is going to be anywhere from 20 to 30%, but I would say most of the time it's going to be at 30% down. Okay. Interest rates right now, like I just had a student close on a deal at 6.5% interest, but he said that his bank told him that he got in like right at the last moment, and they're telling him that the next next loans that going out are going to be like upwards of 8% interest. And this is a conventional loan. All right, conventional loan. So I'm going to move this over here and say conventional loans are like upwards of, say, 7.5 to 8% interest. Okay. And I see like in Facebook groups and stuff, I saw one post out the other day that was like, hey, what terms is everybody getting? And everybody's saying that the terms are just horrible. Okay. So ultimately, when terms are really high, then that just means that the banks are being ultra conservative and they're just making sure that their risk is very minimal. Okay. So what that means is that if you listening to me right now, if you are the type of person that you're saying, I have $100,000, I want to go and buy a storage facility, and and I have to get a bank loan in order to do that. Okay, let me know in the chat if this is how you are. All right. And so basically what that means, which is a lot of students in the coaching program, and a lot of students are like this. We have 100 grand. 100 grand is a lot of money, but in real estate terms, especially right now, it's not a lot of money, right? So if you only have 100 grand, right, and you have to put, 30% down, 30% of 500, $500,000 is $150,000 down. So you can't really, is that right? I'm horrible at math. Y'all tell me if I'm wrong. But anyways, so 30% of X amount of dollars is what you can afford. So that means that your buy box, right? Your buy box has just been minimized. All right. So number one is your buy box for your down payment has been decreased. Okay. And because you can only buy so much money. Your money will not buy a lot. I mean, back a couple of years ago, people were buying at 10. I mean, I have many students that bought loans at like 10 or 15% down. All right. But now it's very, very hard. You're typically at like 30%. So that means your buy box is becoming smaller. Okay. And then when you're running your numbers and you're doing your financing stuff, last week I went over the deal analyzer and we ran numbers on the property that we just closed. when you have to buy something with your interest rates being so high, then only certain deals work. Only certain deals work, right? So, because the interest rates are so high. So that means number two, your buy box just got lower, right? This went from this, I'm like, oh, I want like, a facility and I want it to be nice and I want it to be like, gated with security cameras and I want like 100 units and, this is what I want, right? So you could have gotten the next SBA loan for $1 million at 10% down a couple of years ago, right? Because I mean, SBA will do 10 and 15% down, right? But the issue with SBA loans is they're at, what are they at? Does anybody know? Put it into the chat if you know. But SBA loans are at around 11% right now. And the reason why, 11% interest, and the reason why is because they're prime plus 1 or 2, right, is what they are. And it's a variable rate. These are fixed and these are variable. And so as long as the government keeps increasing interest rates, which most likely they will, then at least for this year, then the interest rates are going to go up. And so like personally, we have an SBA loan right now that we are paying 11% interest on. All right. The only way that this works, right, is if you are buying at 50 cents on the dollar or less. 50 cents on the dollar or less. So just think about that. If you only want to put 10% down and you want to pay 11% interest on your property, what that does is that makes your buy box smaller, right? Even smaller. Hey everybody, this is Stacy here. Thank you so much for watching this video. I am here to teach you how to get your foot into this industry. You're watching this video because you want to learn how to get started in self-storage investing, or maybe you own facilities and you want to be a better manager, a better owner. That is what I do, is I teach people how to do that. So please like this video and also subscribe, hit the subscribe button, because that's what YouTube wants. So in order for me to get out the word on how to get started in this industry, I really need your help. Again, I appreciate you listening to me, and I'm here to help you on this journey, and I will see you in the next video. Take care.